under a lock. So hopefully that helps. If there's specifics that you have a question regarding that interest rate, down payment, credit score, give us a shout, 561-291-8569, or shoot back more details via text. I'll go into it more on the air if you'd like me to, or if you want to just talk to somebody, give us a call. 561-291-8569 is the anytime hotline, or visit the website mr.mortgage. And hopefully that clears that up. I know it's a little confusing, and it's certainly frustrating when your buddy got a better rate than you. You don't get to win the rate brag at the beer cooler during the weekend barbecue. But that's most likely what happened. Is he locked 45 or 60 days ago. So we'll keep this train rolling. What do we have teed up, Tom? Do we have any other questions?
We do. We have Scott who emailed us this one. Scott's asking, you always talk about finding the opportunity in the market with rates, housing costs, inflation all rising. Where's the opportunity?
Hey, Scott, that's a great question. And sometimes it's hard to find the opportunity because it's such a pessimistic news cycle for real estate right now. Everybody's kind of, it's like the piñata. Everybody's taking a swing at this thing, waiting for it to burst. And they think, the housing bubble is going to burst. And it's clickbait to talk about interest rates in the housing bubble right now. So I know finding the opportunity sometimes can be a challenge when all of the news appears to be bad news. But here, I'm just going to throw some quick questions out at you, and hopefully this helps you maybe think about things differently. And that was Scott. So, hey, Scott, if you currently own a home and you believe that interest rates are going to continue to rise, and you have a lot of high debt credit, and I don't know that you do. I'm just asking questions. Do you have car payment, boat payment, RV payment, credit cards that you might be able to take some of the equity out of your property and pay all of that debt down and lower your overall monthly expenditures so that you're in a better position to weather the recession? That's one opportunity in this market. A lot of people have accumulated 10, 12 years worth of appreciation in 2.5 years. So there's a lot of money there that's sitting there. That's the house's money that you didn't do anything other than make a great buying decision to accumulate. So that's an opportunity. If you believe people not being able to afford to buy a first home because rent continues to increase, maybe buying a rental property is an opportunity. Because certainly as more people get priced out of home ownership, that's going to continue to generate a larger pool of renters. Maybe capitalize on that and buy an investment property. And you can pull some of the equity out of your property to go buy an investment property. You can use the DSCR loan that we always talk about as a first-time investor. So another place that you might find opportunity. And I'd love to talk you through that, because you can do a home equity line to pull the equity out, put the down payment against the rental property, and we don't even have to look at your personal income if the property cash flows. I'm working with a client right now who's buying a fourplex because they see the opportunity in rental income. So there's opportunity everywhere. I talked about my friend who pulled some cash out of his property and he's buying down in Ecuador. And I don't know that you want to move to Ecuador, but there's opportunity in every market. And if you have specifics, I'd love to talk you through some of them and just have that dialogue. So give us a shout at 561-291-8569. That's the Anytime hotline, 561-291-8569. And you hear the sirens. Maybe they're chasing that naked burning man down the street. But we're going to be right back for more questions after this break. I'm Mark Eitel, host of the Mr. Mortgage Show. Sit tight. We'll be back in 2 minutes. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. but I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. I host the Mr. Mortgage Show every week right here, same time, same channel. So thank you so much for joining us for this little mortgage mashup. And Dom, my producer, and I do this every week. So we're super excited that you're with us. We're going to do a rapid fire round of questions. I saw a bunch of questions come in during that last break. So I'm going to throw it right to Dom and we're going to get rolling.
All right, we have Michelle just called with this one. She's asking, well, I remember President Biden talking about a $15,000 first-time home buyer grant. What happened to that? Is something like that coming soon?
Hey, that I do remember that too, and there's no short-term grant coming on the horizon. We don't see that, and to be honest, I don't know that it's going to make it through Congress. And it's a great question. I just wouldn't wait on it. If you can do something in real estate now without waiting for the grant, then definitely jump into the market. But there are some grant programs out there. There's the SHIP program that will help with some down payment money. You can Google DPA, which stands for Down Payment Assistance, and then put in your county, not your city, but your county. Most of those funds are distributed on a county level, and hopefully you find the information there. But I wouldn't necessarily wait on the government to rescue us from this, because typically what happens anytime there's a grant or a lower interest rate or some extension of credit, the housing prices just race up to that new level. If there's $15,000 of free money, then everybody's got a $15,000 down payment, then the housing prices are just going to keep moving up to absorb that. So check out the DPA programs online. If you have questions, hit us up. You can find us online. I'll be happy to direct you to someone that may be able to help. So, hey, Dom, what else do we have?
All right, we have Jamie who sent in a text. Jamie asks, can my parents co-sign for me if they already have a house with a mortgage?
Hey, that's another great question. Yes, they can. So here's how all that works. Your parents would be considered a non-occupying co-borrower because they already own their home. And we do have to take all of their debt and all of their income into consideration. So sometimes it doesn't help, because if they're carrying a lot of debt, they may not have enough room in their ratios to actually help you qualify. But more often than not, it does help. And we can certainly do that. We're going to have to fully underwrite them as well. So when you're having this conversation with your folks, it's not as simple as them just signing. They're going to have to produce their bank statements. If they're self-employed, their tax returns, they're fully underwritten as well. And if they are willing to do it, you can certainly use your parents as non-occupying co-borrowers. And they can also gift you the down payment and help with the closing costs. So it's a great, great opportunity. We're seeing a lot of parents helping their children right now, especially, we just mentioned it in the last segment. A lot of people have a ton of newfound equity wealth, and some people are utilizing that to help their kids get into properties. And they're pulling some of the equity out to gift funds to their children, or in some instances, they're pulling enough equity out to pay cash for the property, and then they're selling the property to the children with owner financing. So we're seeing more and more of that too, because some of these properties over the last 4 or 5 years have significantly increased in value, and there's a ton of equity. So great question. Yes, your folks can be non-occupying co-borrowers to help. So hopefully that helps. More questions on that, just give us a shout, 561-291-8569. And I'm going to throw it back to Dom. Do we have anything else teed up over there?
We do. We have Terry that just shot us this email. Terry's asking, this economy has me nervous. I like the idea of doing a refinance and paying everything off, but if home values go down, I don't want to lose my house because I owe more than it's worth. How does that work?
That was Terry?
Yes, that was Terry.
Is he still on the phone?
This was an email.
Oh, okay. Hey, Terry, I'd love to talk to you about that, because if I'm understanding your question correctly, your fear is that if property values go down and you owe more than the property's worth, that somehow that's going to cause you to lose the property, which is a great question. And we do a lot of reverse mortgages, and that's a big question that people in the reverse mortgage space have is, with a reverse mortgage, the balance is going up every month. So if property values go down, there's a real concern that you're going to owe more than it's worth. So owing more than it's worth by itself is no reason to worry as far as having the note called due. They're not going to call the note due on you just because property has depreciated and now you owe more than it's worth. So I think there's a bit of a misconception, because what happened in the real estate bubble crash or burst rather of 2010, 11, 12. I don't know. I try to blur all that out of my mind. Most of you know that I've been in the business for a long time, started in 99. So I do remember those days. But a lot of people lost their properties back then, not because simply they owed more than it was worth, but because they couldn't actually afford the property. So if that was to happen, and I don't think it's going to happen, and you know what? We'll dig into that on the other side of this next segment, but I'll give you a little more info on that, and hopefully it'll answer some questions. But I'm just saying that because I don't think we're going to get into a situation where property values fall enough that you should be concerned that suddenly you owe more than it's worth, because typically with a cash-out refi, we're going to stop you at 80% of the value. So that means if you have a $500,000 house and you're using the rec loan to pay off all that debt, you're probably not going to owe more than $400,000 on that property, and maybe even less. I don't know how much you have to pull out to pay everything down, which is an amazing strategy, by the way, if you believe the sky is truly falling and we're going into a recession. What a great opportunity to use some of that equity to cut your monthly expenses and really hunker down and grow vegetables in the backyard and weather this storm that you think's coming. But to further answer your question, having the balance of the loan exceed the value, the lender's not going to call the note due. There's nothing they can do about it. There are several people who bought during the bubble and values went down significantly, and they held the property and they're now back in profit. So the reality is you need a place to go, home every night. So even if there is a bit of a downturn, if it's your forever home or your long-term home, I wouldn't be concerned about that. But to answer your question, the property value going down to the point that it's less than the home's value does not give the lender the right to foreclose. The only time the lender can come knock on your door and tell you you're in foreclosure is if you stop making the payments or you stop paying the taxes or the insurance on the property. So as long as you're able to make those payments, and a lot of people are doing that right now. It's interesting. I talked to Peter over at SOFL Appraisal a lot, and the reason I talked to Peter is he has better data than all of us. So a busy real estate agent might close 20, maybe 30, let's say 20, it's probably a realistic number, transactions a month. A really busy mortgage professional might close 20 or 30 transactions. I'm sorry, real estate agent, 20 or 30 transactions a year. A really busy mortgage broker might do 20 or 30 a month, which means, we're seeing significantly more transactions. But the interesting thing is an appraiser sees 20 or 30, a busy appraisal office, 20 or 30 a week. And so when I talk to Peter, I'm asking him, what is he seeing? Are you seeing more people that are trying to refi? Are you still seeing purchase business out there? What are you seeing as an appraiser? Because he knows when he's going out if it's a purchase or a refinance. And it was really interesting. I had a deep dive conversation